Exclusive conversation with ET Now. Surendra Rosha, HSBC India CEO, says that emerging markets are the asset choice for FPIs, and India will continue to see growth both on the back of domestic consumption as well as reshaping the global market dynamics. He also sees a huge opportunity for debt markets.
The way we see it is that it's not down to one or two things. There are global headwinds. There are certain structural and cyclical challenges in the context of the Indian economy. But to an extent, the word slowdown, does get exaggerated a bit in my own view. I think, yes, we've seen a slowdown in growth rates. But at the same time, we've got the election uncertainty behind us. RBI has moved on interest rates significantly, as well as on addressing the liquidity situation. So we remain much more positive when we think about FY 19-20 in terms of growth rates. Our own forecasts are closer to 6.8%, which is similar to the last fiscal year. And what is really driving our positivity around this is our own customers. So recently we've just published an outlook based on conversations we've had with our trade customers, people who participate in trade finance, and customers from India who responded on this global survey were the most positive amongst all of the customers globally that we talked to. And within the India context itself, the customers were far more positive this year compared to 12 months back. And if you think about it, 3 out of 4 Indian customers were more positive now than they were a year back on growth. This compares with maybe 50% as a global average. So based on our conversations with customers, based on our observation of the situation, yes, there's a slowdown, but we remain positive for the rest of the fiscal.
All right, so that's interesting. You're actually saying the mood is positive, especially compared to what we're seeing globally, and citing FY 19-20, which is here, which is now.
Which is now, absolutely.
Yeah, that's interesting, because we haven't actually seen anything pick up post the elections. We are awaiting the budget. I'm not going to, really ask you about, what's going to come out there in particular, because I think what we need is something more long-term, something more sustainable, something that will bring conviction back.
Yes, and look, we clearly are talking about the here and now in that context. So it's really about the next 3 quarters. We've been through the first quarter now almost. It's the end of June. So we are thinking about July through to March of next year and saying we are positive. And this is, like I said, it's driven by our on-the-ground view based on customer conversations that we've had, etc. Now, going beyond that, and if you think about what is the growth trajectory and how we can get there, I think there are some enablers that are already in place. The GST, the bankruptcy code, these are legislations that are landing and that are getting into much more of a BAU situation. And that is going to allow us to enhance our growth trajectory as a economy. Equally, I think there are other steps that need to be taken around labor and capital, which will allow us to enhance our growth rates in the medium term.
Okay. When you talk about, the kind of impact that we have seen, however, of the sluggishness in the economy, has it been extreme as a business? What would you say that you've seen on ground? Have you seen an impact, or have you seen it in terms of the corporates that you're dealing with?
So it's a mixed outcome. I'd say that, there are certain sectors where clearly there is an impact. So just within financial services, if you think about NBFCs, there is an impact. If you think about real estate within the broader economy, there is an impact undoubtedly. But then there are other sectors where things are much more positive than the word slowdown tends to signify. And let's not forget, even if we were able to deliver the forecast that HSBC is projecting of 6.8%, it is still meaningful growth in the global context where we are seeing clearly Europe in a slowdown mode, the US signaling that interest rates are likely to come down because growth is slowing there as well. So India as an economy of scale does stand out.
Okay. The latest developments on the trade wars, they're change very often depending on what Trump says, but the latest development post some of the talks at the G20 seemed to be that there might be a resolution. in light of just the uncertainty we've been seeing in the global scenario and the pressure that's been putting, as you said, whether it be on stimulus, whether it be on monetary policy, how do you see things shaping up going forward?
So I think one thing to think about is to look beyond the noise, right? So I think the fact is that there is going to be a reshaping of global supply chains as a result of the outcome of these trade conversations and the ongoing discussions that are happening. We do believe that India is not immune to the global trade conversations, not just the bilateral one between the US and China, and immune in the sense of there is a global slowdown which impacts us. Equally, there is an opportunity for us to capture some of the moves that will happen in the supply chain. So it's really about thinking about which sectors work for us, where we have a competitive advantage, and then driving home those advantages through conversations with large corporates that are going to look to reshape their supply chains for the medium term.
Okay, and let's talk about that a little bit more. In terms of these large corporates, the kind of corporates that you've been dealing with, and in terms of these cross-border transactions, which way really you see, the money moving? Is there more interest now shifting to India, as you just touched upon? Just to give us an idea of what we can expect going forward.
So I can say that, look, in the last 6 to 9 months, a lot more conversations are happening today with companies across the region, whether it's in East Asia, whether it's in the West, about India versus other options. So it's not as if it's an India-only choice. There are other options, but clearly people recognize that given the scale of the Indian market, there is an option here of domestic consumption also anchoring the manufacturing. So there is definitely interest across certain sectors in that context, and you can think about it in also in the ways that the government is pushing certain aspects of change in the economy. So if we look at EVs, electric vehicles, there is a longer term goal that the government has stated, and that does link with the auto sector and the automotive sector overall. And when companies are thinking about reshaping their supply chain, if India is making a big commitment in this area, they can't ignore the fact that the Indian market is a large market. It's going to move in a certain way, and therefore it is interesting for companies to think about anchoring themselves in India for some of their manufacturing.
Okay. Interesting. And it's interesting because what we talk about from the market perspective is constantly also just seeing the pressure on some of the domestic majors to turn around on those EV plans. But I understand the larger context at play here. Which are some of the other pockets as well you're seeing this in?
So in our view, electronics is another sector that will benefit from some of the ecosystems that move across from other geographies to India. Ready-made apparels and garments where we've lost market share, if I were to take a longer term view of historical moves, is an area that we think we will start to get some of that market share back because some of the other countries are hitting capacity.
Okay. All right. So, in terms of what could also possibly boost things going forward, from a domestic point of view, you touched upon rates earlier. Is that really the answer to everything? Are there other policy initiatives that you're looking forward to as well from the government in order to see things improve going forward?
So I think rates is definitely one part of the whole story, but it's not the end. You can't anchor it as the only one that is going to help us, get the liquidity and credit challenges addressed. The fact is that banks alone will not be able to support the credit needs of industry, and we do need to think about global capital being attracted. So, the access to global debt markets, where HSBC does play a significant role, the ability to attract foreign portfolio investors into our debt market here, into our corporate bond market. All of this becomes quite critical in terms of a medium-term outlook on how we get credit or ease of access to credit to the corporate sector.
Okay. And, Is that something also that that you see people picking up or taking favor here in India? It's taken a while for some of that, for some of that segment to really grow. Share with us more on that and the outlook, how you see it evolving.
So if you look at the issuance by Indian corporates this year, there's been a significant uptick in the dollar bond market, and the appetite certainly is there for good quality names and for names. Even if they're first-time issuers in the market, we've seen a great take-up in the transactions we've brought to market. And I think that is something that we believe will continue. Equally, there is appetite to invest in INR-denominated paper, either through the masala format or domestically. But it's really about getting consistency in regulation and ease of execution for the investors, because ultimately they also are deploying this capital across different economies. India is attractive, but the easier we make it for them to deploy in India, the more we can attract.
Has the mood changed at all, though, post the new government?
Well, I think, certainly it is positive. I think we'll have to, it's too early to see the actual execution of that, but it is definitely positive when I speak to investors outside of India.